Good morning, nieces and nephews. It's your Uncle Charles here, and welcome back to my YouTube channel where we do unbiased price action analysis. Guys, we're going to cover like 7 to 8, maybe 10 different stocks today, ticker symbols. We'll see. Let's get straight to the charts though. Yesterday, not much has happened. This was last Friday's price action. This was Monday's price action. You guys can see up and down last Friday. We had volatility, tradable moves intraday. Yesterday, not so much. You can see the range though, very tight, and it was also within last Friday's range, which means if we look on the daily chart, we have an inside candle setup. Everybody's favorite setup. You guys, these setups, when you get the inside candle setup, it gives us a range. It lets us know the market's chopping. But if it can break the preceding candle's range, then maybe, just maybe, we can get some type of direction. It's earnings season. It's got a lot of stocks, a lot of ticker symbols that drop earnings, and a lot of them come after market, so the market's like staying still, I guess, until they get a reaction after market. I don't know what the case is. All I know is I'm going to do my best to trade it level to level and give you guys the best accurate levels that I can give you so that you guys can trade it unbiasedly, because my model is know the levels, know the setups, and just trade it unbiasedly in real time. So how are we going to trade this unbiasedly? Well, we got to look at the context here. We got to take a look at the context. I like to cover the bull case scenario and the bear case scenario. And when we look at the smaller time frame, right? You guys see these lines that I have here? If we take out my levels and just focus on the moving averages, because moving averages are very important in my opinion. You guys can see this light purple line is based on the 5 daily moving average. This is the red line right there. That's the moving average from the daily chart, and there is a feature on TradingView where I can see the daily chart moving averages on the smaller time frame. Does that make sense, guys? It's on TradingView. So this is the 5 daily moving average, and this blue line here is the 20 daily moving average. Okay, even though we're looking at a 15-minute chart, we're looking at the moving averages from the daily chart. I hope you guys understand that. So this is back on October 23. We broke down the 20 daily moving average and we recaptured it, giving us the false breakdown setup. Bullish follow through was when we retested the 20 daily moving average and bounced a higher low, if you will. And it kept on going until we finally gapped above, which was yesterday, the 5 daily moving average. So here is SPY trying to recapture the 5 daily moving average. And yesterday, and including this morning, we are treating that 5 daily moving average as a support. So what we have here is a classic case of stairways up. The market is literally using the levels, literally using the moving average as stairs, as stepping stairs, the staircases, and they're trying to go up. Okay, but you guys know the old phrase. The old phrase that's probably older than some of us. Stairways up, elevator down. So now that we know what the market has been doing, we need to ask ourselves a couple questions. If SPY is going to continue the stairways up, which is the next level? Which is the next step? The next stair step? Which level? Well, I got 582 and 583.2, and then the critical one at 584.5. We clear 584.5, I would be bull bias. Okay? But those are the next stairs. Those are the next levels that SPY needs to clear. Now, if it is pullback time, usually in this case scenario when low volume is here, we get a little bit of a news or something, some type of catalyst that'll get the volume going, and that's when the elevator comes in. If the elevator comes in, you're going to have to react fast, all right? If the elevator comes in, I have some new levels to watch. Okay, the 5 daily moving average, which is around 580-ish now. Okay, I'm not watching 579.5 today, so I'm taking that out of my 15-minute chart. 580 or the 5 daily moving average is what I'll be watching. If it is lost, all the buying pressure that we got from it yesterday is canceled. Put it 578, which defended yesterday. In play, 576.5 and 575. Okay, loss of 575 will be bear bias because we lose the 20 daily moving average. I think the 20 is around 577.47. So getting below 576.5 and 575 levels would definitely be bearish. But it needs to start with the breakdown of the 5 daily moving average, which was at 580. Break those down, 580, 578, definitely could get a pullback. Below the 20, I'd be bearish. And like I said, if we can recapture, we'll trust this bounce when it can recapture some lost levels. We recapture 582, clearing 582, 3.2, and then 584.5. Then we could be bullish. Bullish follow through. The stairways continue if those levels clear. And when you see staircases, you got to be wary of a potential elevator. You got the levels. You just got to be ready to react unbiasedly, like a sheep. And now we have Triple Q, which is also an inside candle setup. The mother candle's range, or the preceding candle's range, is 494.4 up to 500. 494.4 up to 500. Okay, we break those down, those levels. 494.4, that's a bearish breakdown. Put in 492, 490, and I think we can go hit 488. Okay, 488 is based on the uptrend line, this pink uptrend line here. It'll be very healthy if we go test it, but it will need to break down support level 494.4. We drop it. Now if we clear next resistant levels, okay, if we clear 497, if we clear 498.5, we're going to test 500. And if we clear 500, I would be bull bias, and I would favor we go hit 503.4, previous all-time high. We're so close to previous all-time high. Can we go hit it? All right, look to react, guys. NVDA, nice pullback yesterday. Can it continue? I am going to favor a pullback on NVDA as long as below 141. As long as below 141, I'm going to stay in pullback mode, bearish. I need to see 139 and 137, especially 137 fail as support. And if they do, my bearish case scenario will definitely play out. Below 141 is bearish. If 141 recaptures, yesterday's breakdown could be invalidated. That would put 142.5 and back to 144 in play. And if those levels clear, new all-time highs. Please add them to your charts. Tesla, nice little pullback after hitting 273.5-ish high yesterday. This stock is so volatile. It's a life-changing stock for Uncle Chartist. And I hope it's helping you guys as well. If it's more pullback for today, 262 and 260 must fail. If they do, look to short. 258.5, 257, 255, all the way down to 252 would definitely be a possibility. Do not trust any bounces unless lost levels were recaptured. Yesterday we lost the 264 level. I will definitely need to clear to put 266, 268, and 270 in play. And above 270, I got 271.5, 273, and 275 above that. Okay? Gonna be beautiful. All right, all these other, yesterday SPY and Triple Q wasn't really moving, but Tesla was amazing. IWM with the bounce, where did it close? It closed around 222.4, so technically it did recapture my 222 level. Gap it down a little bit. Nothing to be alarmed about just yet. We'll see what happens in the trading hours when there's volume, but overall above 222 keeps yesterday's breakout, false breakdown intact. Okay, so above 222, I would stay bullish, and I would favor 224.5 or higher to be tested. But if we're gapping down and we're below 222, then yesterday's breakout or recapture Could be invalidated. Could have been a false breakout. A bull trap, if you will. But staying below 222 and breaking out 220 would be the sign. We break down 220, then yeah, let's get bearish with 218 and 260.7 in play. All right, possibly even lower, but overall, guys, above 222 is bullish. Amazon, yeah, it needs to break down this 188 level. If it could break it down, I would favor the gap fill to 186.5, and then 185 and 183.7 below that. Below 183.7, I would be bear bias. But for the bearishness to even start, 188 must fail, okay? If we do clear next resistance at 190, we'll likely head up to 193. And above 193, guys, a bottom is in. I would be bullish above 193, and I recommend y'all to do the same. Apple, it's looking kind of bullish, kind of, not too confidently. Next resistance at 233 and 234.5, but we can round it to 235, okay? 233 to 235. If those levels clear, 237 or higher in play, okay? I'll definitely be bullish if we can get back above 233 and clear 235. But I'm not fully bearish either. Supports at 231.5 and 230. If those levels fail, 228.4 would be in play. And break down to 228.4, I would feel more confident in being bearish, all right? Here is Netflix. It broke down the fib level yesterday. I mentioned to you guys 752.7. Decent breakdown. Still below that. And as long as below that, next support is at 749. If we lose 749, guys, it's going to get a lot nastier down to 744, 746 area. Maybe all the way down to 740, all right? But it needs to break down some more support levels, 749 or lower. To trust any bounce, 751 and 752.7 must recapture. If those levels recapture, 751 and 752.7, we're likely heading back to the 760s or higher. This stock is pretty volatile and it's not beginners friendly, but it's very tradable, okay? Even a chop day for Netflix is a fucking volatile day for other ticker symbols, okay? And I'm going to cover GameStop today, okay? This is one of those meme stocks from years ago. One of my Discord members asked me to cover this yesterday. I actually took the trade with them. It was a small position, and it actually worked out. So shout out to my Tier 3 members that put me on the GME. And I would like to see, like, based on this setup, we got the breakout. I like to see if we're going to get more upside. I'm overall bullish about 21.8. We also cleared 22.6. That's a fib level yesterday. So as long as above 23.5 and 25 are in play, and above 25, I think we could get a much bigger pop to 28 to 30 area. Okay? I wouldn't short this unless the breakout we had yesterday is invalidated, which would need GME to drop below 22.6 and 21.8. If it does, get back to bearish 20, 18.7, 17, all would be back in play. But right now, I'm going to stay bullish, and if we can stay above 22.6, like I said, 23.5 and 25 would be in play, and above that, 28, 30 zone. All right, guys, so that's what I have for you guys today. Thank you guys so much for watching. If you guys want more content from Uncle Charters, you want dark pool levels, you want awesome flow, guys, enter the Discord. What are you guys waiting for? Be a sheep. Let's get this money. Let's kick the market makers' ass. Peace.